Hey, good morning, everybody. Lovely to see a good attendance here today this morning. Thank you for joining us today. My name is Leanne and I'm the Partnership Manager here at GoSimpleTax. Your presenter today is Aiden and he will be with you shortly. Before we start, there's just a little housekeeping I need to run through with you. The webinar will be recorded and we will send everyone who's registered a copy via email over the coming days. Well, hopefully either later today or tomorrow. We welcome any questions and comments. Please use the Q&A section. I've already said good morning to people and pop your questions in there. That's at the top left of your screen. Please use this throughout the webinar. We've already had some questions sent in through already in advance, and I'll pop these in the Q&A section shortly so you can see them. Any questions raised will be answered at the end of the webinar unless I see something that's important, in which case I'll interrupt Aiden to ask on your behalf. Just before the Q&A session, there'll be a live demo of the software and information and a special discount available to you all as a thank you for joining us today. And we'll inform you of pricing of the software at this point also. Okay, I think that's everything covered. So before I hand you over to Aiden, I'd just like to thank Money Donut for allowing us to perform this webinar to you today. So Aiden, if you're ready.
Thank you, Len. I'm assuming you can hear me all loud and clear. So yeah, today we're looking at demystifying tax and expenses with Money Donut. So a little bit about myself. I'm a personal tax senior. I've been within the industry for over 10 years now, and I've basically joined GoSimpleTax to help with the support, develop new services such as the tax return review, which I'll mention a little bit later on. And also just with my tax knowledge when we are updating the tax years. So what we're looking at today, what expenses can I claim, including capital allowances? What expenses can't I claim? The common self-assessment pitfalls, self-assessment deadlines and tax payments, and then the overview of GoSimpleTax software, followed by a conclusion. So before we start, I'll just ask Leanne to pop on the first poll, which is a 1 to 5 rating on stars. And basically the question is, how do you currently find the process of completing your tax return? So if you can just start that poll for me, please, Leanne. So we're looking at it on a basis of 1 to 5, 1 being the most difficult and 5 being a piece of cake. So just looking at the numbers involved that have voted, we've got about 30% that haven't voted yet. So if they can do a quick vote. Okay, so we've got a 1 star in there. Very interesting. Couple of 1 stars. So hopefully, as we go through this webinar, that should help you out. And then at the same time, when we go over the overview of GoSimpleTax, hopefully there's some nifty things in there that can help you as well. Okay, it's gone pretty static now. So just going to publish the result on your screens. I'm not too sure what you can see, but there's an average rating of 3.3. 9% of people have voted that it's very difficult. Most people have gone in the middle, 59%, with 3 star, which means obviously not too difficult, but not completely stress-free. And then there's a handful of people with 18% on 4 star and then 13% on 5 star. Okay, so hopefully following this webinar, things will be a little bit clearer for you. If not, then be sure to get in touch. We will leave our contact details at the end of this webinar, and we can always help out in the best way we can. So just going to hide those results now and flip back to PowerPoint. So what expenses can I claim? What you're going to see on the next couple of slides, or a few slides it might be actually, is the sections that you see on a tax return, so the headings, and then I've just broken them down into different self-employed businesses, and then put next to each business what you can claim. So cost of goods bought for resale or goods used. in simple terms, that means anything you buy which you then use within your business. So basically materials and other things, tools, etc. So just a few examples there. You've got a hairdresser who will buy dyes, tints, hairspray, shampoo, conditioner, mousses and brushes. They will buy them on the basis that they're going to be using the business, and usually after one use or a couple of uses, the dyes and tints, for example, they'll get thrown away, but they have been used in the business and therefore it is considered cost of goods bought for resale or goods used. Another example is a decorator. They'll buy paints and brushes and wallpaper for each of the jobs. That is an expense at first to the business owner, and then they will obviously mark up their services and usually make a profit when selling it to a consumer. So that's what you put in that box. Next box is the car, van and travel expenses. So you've basically got two different options here in terms of if you use a car or your own personal car for business. You can either manage the mileage, track the business miles, and claim them at HMRC's approved rates, which is 45p per mile for the first 10,000 miles, and then 25p per mile thereafter. Or depending whether you want to choose the actual car expenditure method, which is basically adding up all the expenses that you have for your car, so insurance, repairs, services, road tax, fuel, also like car washes to keep the appearance of the car nice, because you can't turn up to a client with a dirty car, etc. And then subject that to a private use adjustment. So you should really be tracking your miles anyway. So let's say you did 10,000 miles in the year in total and 5,000 of them were business use, then you would add up all them expenses that I've just mentioned and basically divide by 2, because that is 50% of business use that's relevant to your accounts. You'll also have travel expenses as well. So if you get a taxi, train or bus to a certain place, if it's just easier rather than driving, or you don't drive, or if you need to stay over the night for a hotel costs can be in there as well. Wages, salary and staff costs are pretty self-explanatory. It just covers wages, salaries and staff costs. Staff costs being like bonuses or expenses or anything of the sort that you reimburse. Moving on to the next box, and you've got rent, rates, power and insurance costs. In simple terms, that is just basically what you consume, usually in the building of what your business is acting out of, or sometimes use of home. So if you've got property, business or liability insurance, make sure you include that in there. Any costs in terms of gas, electric and water. For example, let me go back to a hairdresser. They'll wash people's hair, therefore they'll have costs of water. They have electric when they're using the hair dryers, etc. So all those costs in relation to the business can be included. If you use or if you work from your home and you have like a room whereby it's used for business use, then we'll come to that a little bit later for the use of home. You can see there's an asterisk there, and basically I've just expanded on that point in a bigger slide. Also, if you do pay rent, if you do have a salon or you do have a warehouse and you pay rent, that is an allowable business expense as well. Next section is accountancy, legal and other professional fees. Once again, pretty straightforward, but if you've got accountancy costs, any legal disputes, so the legal fees included in there, or if you've got PII, which is professional indemnity insurance, those premiums can be included in this box as well. Repairs and maintenance, once again, is fairly straightforward. It's repairing broken equipment or replacing broken equipment. If you have bought a hammer previously and it's beyond repair, the heads fell off or something of the sort, and you go and buy a new one, then you're replacing broken equipment. Yeah, it's as straightforward as that. Interest and bank charges. If you've got any business bank loans, you can claim for the interest. Notice the interest. It's not the capital payment. It's the interest element that you can claim as an expense on your accounts. And if you've got any credit cards or bank accounts that you use for business, and let's say you've gone into your overdraft and you've got any charges, or if you are being charged interest on your overdraft, anything like that, then just the interest element is allowable on there, as well as any full bank charges. So if you go into your overdraft and you get charged, let's say £10, I think my bank charges £10 if I go into my overdraft, then that £10 charge will be allowable as well. And I think coming up to the last two boxes now, yep. So last two boxes on a normal SA 103 self-employed schedule, you'll see phone, fax, stationery and office costs. That's basically if you use your mobile phone for business and you don't have a separate business mobile phone or telephone, then you can include the total cost for the year and then private use and restrict it again. Once again, this is up in the air of how you can manage the private use. But if you were to say you wrote down how much time you use your phone for business use compared to how much you use it for personal use during the day, then sort of divide that by the total and basically get somewhat of a business use percentage. If mobile phone costs are £500 during the year and 50% of your time is spent doing business calls, planning, updating your calendar, anything, quotes, phone calls, anything, then 50% of them relate to business, therefore 50% of the costs can relate to an expense in your accounts. Likewise, if you've got till, so you've got till roll, paper, ink, pens, etc., etc. Any postage if you're running an online business and you have to ship anything out, then the postage, the envelopes, the boxes, the postage bags, all allowable. And if you purchase any computer software with a useful life of less than 2 years, that would go down as in the P&L account as well. Anything more than 2 years usually goes through capital allowances as it's got a longer existing life, but we can talk about that a little bit later on. And the final box is just basically to mop up anything else that you've got questions on. So you'll see this is quite broad and it goes from one extreme to another. So you've literally got marketing, advertising and website costs, as well as like your branding image, so business cards, flyers, leaflets. If you have a salon or a rented property and you go and pay for a sign, signage is included in there as well. Professional subscriptions, if you have any of those, you can include that in the other allowable expenses box. Any app subscriptions. So anybody who's been on a previous webinar with me will know that as well as a tax advisor, I am also a qualified personal trainer. Pre-COVID, I was in the gym every evening after work doing clients, and basically I had a couple of apps. So I had a calendar planning app, which cost me £5 a month. I had Go Cardless, which the fees on there would be allowable from them, and then anything else that I did subscribe to. So I also had a personal training app whereby I could plan workouts. That cost me £50 a month or something like that. Then I also included that in the other allowable expenses section. And then other expenses, as I say, it's as broad as anything, but it's anything that is wholly and exclusively for the purpose of the business. So this applies for all expenses, but basically take a step back and say, right, okay, is this expense wholly exclusively for the purpose of the business? If it is yes, then go ahead, stick it in your accounts, because that is the question that HMRC will ask if they were to open up an inquiry into your return. So let's touch back on the use of home allowance. So there's a couple of options here. You've got the simplified expense option, which as a self-employed individual, you basically look at how many hours you spend in your home per month and you get a flat rate per month. So if you have business working hours of 25 to 50 hours per month, then you have a flat rate of £10 allowable. 51 hours to 100, you have an £18 allowance, and 101 hours or more gives you £26. The flat rate doesn't include telephone or internet expenses, so that can be in addition for the business usage of those. Or we can look at the actual expenditure. So it's similar to the cars where you've got your mileage allowance or your actual expenditure. Basically, the mileage allowance is a simplified expense whereby people can just literally look at the mileage that they do for business and times it by 45 pence or 25 pence, depending on how many miles. Whereas the use of home follows the same structure. So we basically look at it and say, let's have a look at heating, electricity, council tax, mortgage interest if you own the home, or rent if you don't, as well as internet and telephone use in the property. What you would basically do is add all those up and divide it by the number of usable rooms in your home. So if you live, let's say, in a 2-bedroomed 2 up, 2 down, then you've got 2 bedrooms upstairs that you could potentially use. You've got a kitchen and you've got a living room. So that's 4 rooms. Let's say you do the majority of your work in the kitchen, for example, or in your bedroom, then you would basically get those costs, divide them by 4, and then look at reasonably how much that room is used for business. So, for example, let's say the kitchen, actually. We're looking at the kitchen and there's 4 rooms in the house, so divide the total cost by 4. And then we say, right, okay, well, actually, I probably spend 60% of the time that I'm in the kitchen doing work, 40% entertaining or cooking, etc. So therefore, you'd get the total cost, divide by 4, and then times it by 60%, which gets your business use of your use of home. Hopefully that's not confused anybody. I know it can be a little bit confusing, but if you're just struggling, then go for the simplified expense method. It's much easier, and you just need to track how many hours you're doing. Other allowable expenditure are capital allowances. Hopefully, Leanne has just thrown in a few links. So the links relate to each type of capital allowance expenditure, which the normal business person would have. But first of all, what are capital allowances? Well, basically, it's a claim when you buy assets that you keep and use in your business. So equipment, machinery, or business vehicles, cars, vans, or lorries. Looking at the claims, you've got AIA, which is 100% of the cost of the plant and machinery that you've purchased. It is currently at a limit for a year of £1 million. This is only temporary and will drop back down to, I believe it's £200,000 from the 1st of April 23. But basically, if you were to purchase something, let's say you are, let's stick with a hairdresser, then they were to buy the big, massive hair dryers that I'm assuming costs quite a lot of money because they're quite big and very good. So let's say they cost £2,000. Because that is going to be used for quite a while and it's considered plant and machinery, it would go into the capital allowance claim. You would claim 100% of that, provided that you haven't exceeded the £1 million allowance. If you do exceed the allowance, then you then look at the writing down allowances, which we'll mention shortly. On the other hand, we've got first year allowances, which you can also claim 100% on. And basically, first year allowances relate to purchases, plant and machinery purchases that basically help reduce your carbon footprint. So it's basically being more energy and water efficient. So HMRC basically obviously have a list of things, and the list of things is described as energy saving equipment that's on the energy technology product list, for example, certain motors. So that would be if you were buying a zero emissions electric car, that you get 100% of the expense deducted from your income. Simple. Water saving equipment, that's on the water efficient technology product list, for example, meters and efficient toilets and taps. So once again, that is water saving and therefore reducing carbon footprint. Plant and machinery for gas refueling stations, so for example, storage tanks and pumps. You've got gas, biogas and hydrogen refueling equipment, and then you've got new zero emission goods vehicles. good point there is that for any electric vehicles that you are buying, they need to be new, brand new, unused, to get the 100% first year allowance. Other than that, it'll go down to writing down allowances. So hopefully that's give you an idea of what first year allowances are. And then we've got writing down allowances, which just cover everything else. So 18% is the main pool, which is the majority of purchases for companies. And then you've got the special rate pool, which is those that are less economical. You obviously get a lower percentage claim there because they want to basically not, they want to discourage you to buy in them certain things. So example here, we've got a car. A brand new unused electric car would go into the 100% bracket of the first year allowances. Another car, we've got a hybrid that is less than 50 grams per kilometre on their emissions. New and unused, that would drop into the writing down allowance of 18%, the main rate pool. If there's private use on it, it will go into a single asset pool, but that's a whole different thing. Still 18% though. And let's say someone has or enjoys the sports cars. Let's think of a crazy example. Range Rover, the most sporty one, the SVR. I think it's the SVR anyway. Ridiculous. It's over 100 grand, and the grams per kilometre is over 200. For that, you would only get 6% of the claim for capital allowances. So that was capital allowances. Hopefully, as I say, Leanne has dropped a few links in the either questions or the chat box, and you can look at them in a little bit more detail from the HMRC website. Now, just a quick slide on what expenses can't I claim. Usual misconceptions here on what can be claimed, but here's some common examples of things that are claimed but shouldn't be. So clothing, if you bought to work in, it needs to be either branded or considered protective equipment. So for example, I have some friends who are plasterers, and they literally just go to JD, buy some joggers, buy a couple of Nike t-shirts, and have asked me, can they claim for them? And I've said no. It needs to be branded with your own company brand to basically consider it as advertising, and that's why HMRC allow it, because it's for wholly and exclusive for the purpose of the business. People see your brand or logo or your number, and therefore it can be considered advertising, and that's why branded stuff is allowable. Also, they obviously don't want people who are on the knees a lot. Plasterers are low down most of the time on the knees. So if you were to buy padded trousers around the knees or knee padded trousers or something of the sort, then that would be allowable. But just your everyday clothing, even if you only wear it for work and you've got paint all over it or anything like that, can be claimed or shouldn't be claimed. Training courses that acquire a new skill. So it needs to be an existing skill refresher. So basically, let's say fresh out of college, somebody wants to become a hairdresser and they do a fast track 12-week course for £2,000 because that person didn't know how to do hair previously and they've acquired a new skill. That £2,000 is not allowable in the expenses. However, if they in 2 years' time just need a refresher, they're not utilising all the skills that they did learn, so they've gone and done some CPD, continuing professional development, then provided that it's the same or similar skill set that the course provides, then the person can include that expense. So the £2,000 for the new skill is a no-go, and the £500 for the refresher course from Hairdressers United or whatever can be claimed. Cost of food or drink, just because somebody is popping to McDonald's on the lunch whilst they're working. Once again, I've got that friend who's a plasterer. He pops to McDonald's quite a bit because he's away from his home and he's out and about quite a bit. Yeah, you can't claim that. It needs to be outside of a normal routine, an overnight stay is usually required. So outside of a normal routine would be if you've just picked up a job in London and you live in Manchester, where I'm from, then it's going to be a long travel down there, long day whilst you're working, and then the travel back. That you can have a reasonable expenditure for the cost of food and drink there, because it's outside of your normal routine. HMRC could challenge this, and depending on what you deem reasonable, they could say you should really prep. But in HMRC guidance, they do allow for cost of food and drink to be deducted if it's outside of a normal routine. Just floating around Manchester, even if you go in, I don't know if anybody knows Manchester, but if you're going down to South Manchester, like Altrincham Haleways is where you don't normally go, because normally you're stuck around Chadderton Oldham, then that's not considered outside of a normal routine because it's in reasonable distance. It's more quite long journey trips. There isn't actually any identification of how far outside of a normal routine is. It'll just be by good judgment on that one. Parking tickets while abstaining from working on a job. Just because you want to park outside a house with double yellow lines or outside a business in the middle of the city centre, and you get a parking ticket, that's not for the wholly and exclusively for the purpose of the business. That's just because you're being lazy and you don't want to go and find a parking space. So unfortunately, parking tickets are not an allowable expense when looking at your accounts or your tax return. Client entertainment is not allowable either. That needs to be added back. Likewise with depreciation. An accounting adjustment is including depreciation on whatever equipment you may have, but that's not an allowable expense in the eyes of the taxman. Any client entertainment or depreciation need to be added back. There is an exception with leased machinery, but I would advise you to get help off a professional if you are in that situation. And capital payments, mortgage payments or loan repayments, only the interest elements are allowable. So I do see people paying when they have land and property, for example, that's still a business. If they make large mortgage payments and they have a capital repayment scheme, then they usually include the full amount in their accounts, when in actual fact that's not correct. They need to only include the interest element, and especially now as the rules have changed. But yeah, it's usually only interest elements of any capital payment schemes or anything like that. So hopefully that gives you an idea of what can be claimed. I've obviously put the usual expenses that are claimed but shouldn't be, and then I've given you the reasoning into what they can be claimed as. So it's not completely shutting them out, it's just identifying and splitting the correct claim with the incorrect claims there. So I'm going to take a quick breather. Hopefully Leanne pops up now with poll 2. So how do you currently complete your self-assessment tax return? Let me just pop on there. There we go. And we've got a handful of options. We've got the HMRC portal. We've got a paper return due by the 31st of October. We've got an accountant. We've got GoSimpleTax, and then we've got other digital software. So once again, there's quite a few people in here. So if everyone can look at their screen now and just click whatever it is on there that relates to yourselves. I'm just going to grab a little drink. I can imagine people cheering when there's a moment of silence there. Sick of hearing my voice already. So only halfway through, so you've got another 30 minutes of my voice, unfortunately. And we are 60% of people have voted. So if we can get, let's say, 5 more people, please. There's 1. And then we can have a look at the results and then carry on moving. Couple more people. Yeah, just literally clicking whatever option is on the screen. Interesting. Okay, so we'll hold there. So on your screen now should pop up the results. we've got 68% of people using HMRC's portal and 31% of people using an accountant. So nobody's doing paper returns, which is great. Making Tax Digital is coming into play from April 24, and that basically is the digitalization of all your records and the whole process. So glad to see that there's not anybody on paper returns. Nobody using GoSimpleTax, which is obviously unfortunate. Hopefully that will change next time we come and do a webinar. And then nobody using any competitors or other digital software to submit them either. So I'm going to hide those results now and flick back to the PowerPoint. And common self-assessment pitfalls. So what are they? So I'm going to read them all out and then I'll expand on each point individually. So missing deadlines, forgetting tax reliefs or allowances, misunderstanding what payments on account are, forgetting about P45 and benefits from a previous employer if they start a new business during the year or even change job and earn over 100k, improper record keeping, and then claiming expenses that can't be claimed, which we've already touched on. So hopefully, if I've done this right, we click on missing deadlines. There we go. And here's your deadlines for self-assessment. Shouldn't be a big issue. So a tax year runs from the 6th of April to the 5th of April. If during that period or at any point in time your turnover exceeds £1,000, then following the end of the tax year, you need to register for self-assessment with HMRC. So if it is, let's say, 6th of April 2022, and we've just started out doing an eBay business and we're only getting 20, 30 quid here and there, and then it gets to July and you start selling, I don't know, something to do with summer, and all of a sudden your income spikes, and previously you've only earned £500. This month alone you've earned £700. That's exceeded the £1,000 limit. So that is July 2022. Fast forward to the 5th of April 2023, and at that point, that's the end of the tax year. You've obviously exceeded £1,000 because you did that back in July. Therefore, look at step 3. We need to register self-assessment by the 5th of October. That will usually takes 10 minutes. Sticking your business details in, sticking your own personal details in, and the reason for registering. 10 minutes maximum. A few weeks later, through the post, you'll get a letter and it'll be a UTR. You need that UTR to then submit your tax return. You need to submit the tax return by the 31st of January, provided that you are submitting online, which everybody is in here, which is good. And therefore, you've got usually a few months to get that submitted. You'll look at making the balancing payment on the same day. So therefore, you're avoiding the late filing penalty of £100, and you're also avoiding any interest for late payment. You basically need to make the payment if it's late before the end of February, usually about 2nd of March, I believe, 30 days after the day due, and you'll then avoid 5% surcharge on the outstanding amount of the balancing payment. If you fall into payments on account, then you'll have somewhat to pay on the 31st of January, and then you'll have another half to pay on July. So payments on account, for those that don't know, is basically HMRC's way of getting taxed before it's due. So if you're employed, you're getting taxed monthly, coming out your salary, and HMRC are happy with that. As a self-employed individual, you get paid gross most of the time, unless you're some subcontractor in CIS scheme, but most people get paid gross, and HMRC have got to wait until after the end of the tax year before they find out how much you earn to then tax you. So what HMRC basically do, provided that you meet certain criteria, is say, okay, the first year of your self-employed business and you've got more than £1,000 tax due, and basically what we're going to do is take away your class 2 NIC amount, £158.60, and we're going to basically say, right, the rest of that tax due, we're going to half that. You can pay half of it in addition with your tax liability in January and then another half in July. When you come to submit your tax return next year, you've already technically paid your tax if your income is very, very similar. If it's more your income, then you've got to pay more tax, which will generate a balancing payment and higher payments on account. Or if it's less, then you'll have a small amount repayable and then payments on account towards the following year again. That is what payments on account are. If you're not really following, ask a question now, please. We do want to make sure that everyone is understanding everything that's being mentioned. So anything that you don't understand, ask the question, and either I'll explain it again a little bit later, or we'll get in touch with you and speak to you separately. We do have some help articles on payments on account, which gives you visual aid, which may help you. So if I just click back here, there we go. Back to common self-assessment pitfalls. Other things are forgetting tax reliefs and allowances. If you are a business and your expenses are less than £1,000, then you could, instead of claiming your actual expenditure, you could claim the trading allowance. Likewise for properties, if you've got expenditure less than £1,000, or if it's jointly owned £2,000, then you can ignore your expenses and claim the property allowance, both jointly or solely. And it basically means that you're getting a free £1,000 if your expenses are less than that. It's easy tax planning, but people don't know about it and people miss it out. I do tax reviews, like I mentioned earlier, and that is basically someone books an appointment, I review their entries on the tax return and try and save them more money. I have performed about 200 returns, reviews, sorry, and I'd probably say at least 10% of those have forgotten to just do this basic tax planning of including allowances. So I've saved them a few £100 here and there quite easily. Misunderstanding payments on account. I've just been through that in more detail, so I'm just going to skip past that one. As I say, if you didn't understand, drop a question. Forgetting about P45, which is what you get when you leave an employment during the year, and benefits from a previous employer. A lot of people think that because your salary is getting taxed, you don't have to include it on a tax return. Complete rubbish. What a tax return is the gathering of all sorts of What a tax return is gathering all sources of income in that specific tax year, and basically saying, right, okay, the total income that you have is X amount, therefore we need to tax things based off what the rates are. So if you've got employment income of 50k and then you go and become self-employed and earn 50k all in the same tax year, then that's a total of 100k. If you miss off that 50k, you're not going into the higher rate band, and therefore you're not being taxed correctly. You should have been taxed at 40%, and that just hasn't been done because you've omitted some of your income. HMRC will pick up on this quickly and basically send you an amended return. If you've done it purposely, then they can charge penalties. Yeah, it's crazy. But what you need to do is just be on the ball and say, oh yeah, actually, I've just gone from being employed to self-employed. Make sure I remember to keep that P45. Any P11D benefits I've got, stick it on the tax return on an SA 102 employment schedule, and happy days. HMRC should be happy. Improper record keeping, like I mentioned before with a mileage allowance. If you are claiming mileage allowance, then really you need to keep a mileage log. If you aren't keeping a mileage log and HMRC inquire into your return, they're going to expect to see one. If not, then they'll say to you, no, you can't claim that. At the same time, they may accuse you of overinflating your expenses and charge you a penalty. It's what they do. You need to make sure you keep proper records. Likewise, if you're claiming receipts and you actually have the receipt while you're doing the tax return, stick it on your tax return. Don't take a picture of it. Don't upload it anywhere. Don't save it anywhere and bin it. Then if HMRC inquire into you in 12 months' time, or more if it's suspect something, then they'll say to you, well, you can't say to me that it was there when you had it and now you've not got it, because we don't know about that now. So therefore, you can't claim that either. At the same time, you could get charged for not having proper records. I think it's about £3,000 for not keeping proper records. £3,000 can easily add up if you've done it for a couple of years. So yeah, making sure that people keep proper records and keeping the receipts or taking pictures of receipts. With MTD coming in April 2024, I'm just telling people to get a Google Drive, share it with their accountant, or just keep it on the phone. When they get something, obviously arrange it into a nice neat folder system, during expenses or whatever, get a receipt, take a snap of it, upload it into that folder in the correct part, and then bin the receipt. That's as long as it's backed up, you're not going to lose it, then that is proper record keeping, and it's already been ahead of what the legislation will be in a couple of years, well, just under a couple of years' time. And finally, claiming expenses that can't be claimed. Obviously, we have spoke about that here. So just a quick 10-second look over that while, again, I take a breather. Those are the expenses that can't be claimed. Okay, so I believe there's another poll now. Yeah, so are you aware of making tax digital for income tax that is coming into legislation from April 24? I want nobody to say no because I've already mentioned it twice in this webinar. So there is somewhat of an awareness towards that. Literally in the last 40 minutes. So hopefully no one says no. But if you want to say no, say no. I'd rather you be honest than lie. So someone just switched that. So I'll just let people vote for the next few seconds, and then once again publish the results and continue. Oh, okay, we're looking good. I think we've had a few people more on the previous vote. So if anyone can just do a little vote on the screen, there we go, perfect. And that's made it not a tie anymore. So 10 seconds, and then I will publish. 5 seconds. 3, 2, any last changes? Nope, 1. Okay, publish results. Again, not too sure whether you can see the number of votes, but I'll just go percentages. And 9% don't know what making tax digital is. Them two people, please will you ask a question, whether it's what is making tax digital, or just literally put anything in the Q&A box now, so we can basically sort of introduce that into you, because it is something that you need to be made aware about very soon. Otherwise, go and have a little search around on Google and start reading. We've got 50% of the people who voted say, yes, but I don't feel like I need, I can't see the rest of the finger. I'm going to say, I don't need to deal with it now. So that's 50% of people saying, I know about it, but it's in a year and a half time, so I'm not going to be too caught up on it at the moment. That's fine. At least you're aware. And then you've got people, 40% of people who are making preparations for it already. Great. So hide the results there, that's fine. If anybody would like a webinar on that, then literally once again in the Q&A section, just put, yes, I would like an MTD webinar. It basically allows us to target what our audience want rather than us assuming and it not being helpful. So if you would like a Making Tax Digital webinar, stick it in the Q&A now, please, and we can sort of track that for future webinars. Right, on to GoSimpleTax. So nice and easy here. Oh, press back by accident there. This is what you see on the screen. In no way am I slagging off HMRC, but it's not as bright, it's not as colourful, it's not as intuitive. You get prompts on GoSimpleTax, you don't get them on HMRC, and things are just a little bit easier to find. So I'm going to go through a series of screenshots. Hopefully it helps you. And I'm just going to show you how to add certain things, how to take things away, etc., etc. So On the page now, we've got the SA 105 property page. If you wanted to add a new page, over to the left-hand side, you can see the new page button underneath the tax due. We will click the self-employed button, and we will put in the SA 103 business details. SA 103 is HMRC's code for the schedule of a self-employed person. Include business name, business type and address, etc. Once all that's set up, then we get put onto the same page. On all the pages in GoSimpleTax, you will see the same layout. So it's consistent. Once again, it's intuitive and it's very easy to understand what you need to do. There's a plus button on the right-hand side. What does that do? It adds, obviously, whatever it says, plus income, plus group. So first of all, we'll go to income. Have a quick click on there. If you did receive any COVID support scheme SEISS payments, you can include them on here. If not, stick it just to stick in sales or whatever you do, cash sales, invoice sales, and put in the description of the amount. You can put in your daily sales, weekly sales, monthly sales, bi-weekly, quarterly, whatever you want to do, monthly. It's completely up to you. Or you can just put in a total like I've done in the example. So in the year, I made 24 grand. Next thing, I go down to the expense section, and I am going to press the plus group button. Choose the groups that are relevant for me, and then once again, new plus buttons, adding the expenses in the particular categories. You'll notice them categories are the same ones as what you've seen earlier in the webinar, because we go off the same format as what the tax return is, so it's easy to complete. Yeah, it's straightforward. Press the plus button. Choose a drop down from the drop down menu. I've chosen fuel in this example and included 2,500, and I've also stuck in a few extra expenses. If I wanted to edit anything, you'd literally press the pen tool, update the figure, and then press save, and you'll see 2,500 has changed to 3,750 because that's what I wanted to change it to. Easy to amend, and can do that in seconds. You get a real-time tax due figure, so as you're completing it in the top left-hand corner, you get an idea of what tax is due for your income during the tax year. There's a more detailed tax calculation page. In the top right, you've got basically how your tax liability is made up. You've got a tax liability plus NI contributions gives you a total, less anything that's paid at source, less any payments on account gives you a balance, and then plus in payments on account if you fall into the regime. Bottom left, you've got the SA 302, as you would see normally, which basically gives you an overview of your tax calculation. Nice and easy, nice and straightforward. If you need any help or you're struggling to do anything, then in the bottom left, you'll see the question mark in a little red speech bubble, pop-up bubble, I don't know what you call it. And if you just go over to the third option, or maybe the fourth option if live support's on, is contact support. And when you go on contact support, it'll ask you for a subject, a body of text, and your email address, and maybe your name. What you do is submit a ticket to us, and I'll be there to help out, or one of the team will be there to help out, and we get back to you within 24 hours, 100%. But usually, during the non-busy times, you'll probably get a reply in 10 minutes, 15 minutes. During the busy times, then maybe an hour. But yeah, we literally clear it as soon as they come in, pretty much. So any questions on how to use the software, or if you need any help with any of the help articles, you don't understand something, then yeah, get in touch. We also have the tax review service, whereby if you complete your own tax return and you're not too sure whether you've done it right, or you think that you might be able to save a little bit more money because you're not too sure on what to claim, then you can pay an extra fee and basically get me to review it for you. On there, you'll receive a report with all my comments on each of these schedules, and then we'll also sit down 15 minutes on a Zoom call. So hopefully that is a quick overview of GoSimpleTax. Even if you just want to go onto GoSimpleTax website and create an account and just have a look, it's free to have a look, and it's classed as a freemium account, which is basically you go on and you can have access to some of the features, not all of them, some of them, like creating the actual tax return, but you can't submit or view your tax calculation, and just get a feel for it. If you like it, then you can make use of the discount code, which Leanne's going to do outro now.
Okay, so just before we start the Q&A session, we've got quite a few questions there already, Aiden. I don't know, you might just want to have a quick run through them while we're talking, yeah? If you've got any more questions, please ask away. We'd like to thank you for joining us today by way of a 50% discount off the software for new customers. The discount code will be emailed to you automatically, like 2-3 minutes after the webinar finishes. You should all get an email. But it is a limited time offer. You have until Friday the 29th of July to use the code, and then again, so that's 50% off. So this will give you a few weeks. You can have a play about with the software before you make your decision. Hopefully, so you can see the pricing is on screen. The single return is just £54.99. However, with your discount, that's going to make it an even better £27.50. So should you have any comments or further questions after the webinar, please reply to any email you've received from myself, and I can pick these up for you. So I think I'm going to start reading out some questions now. Aiden. Oh, and by the way, we've had quite a few people saying yes to an MTD webinar, which is brilliant. Thank you for your replies there.
Yeah, that's good. As I say, it's better for us to ask our audience rather than us just assume, isn't it? So.
Yeah, definitely. Okay, so I'm going to start with the question. I can see some more still coming through as well, so we'll go through them as quick as we can. If we don't get to do them all, we will get back to you individually on any questions we miss, if we do miss any. So I plan on becoming officially self-employed ASAP, today even. Do I declare all income from the date I'm officially self-employed or the whole current tax year, April 21 to 22?
So that pretty much is the same thing. So you, as soon as you become self-employed and you start
Sorry.
It's all right. Let me start again. So do I declare income? Yes. So basically, as soon as you become self-employed and you start invoicing your customers or clients, then yes, you'll have that start date, and then you will run it to the end of the tax year to begin with. So you'll basically have, let's say we started today on the 14th of July, you'd have the 14th of July period up to the 5th of April, and that would be your first so-called short accounts. You can then either extend it into next year and go to the 13th of July, and then that'll be your first year. However, there is a period basis reform, so I would suggest just go to the end of the tax year, 5th of April, and then from then on, start doing your year from the 6th of April to the 5th of April. Keeps it in line with the tax year, keeps it in line, ready for MTD as well. Yeah, start declaring your information today, or start recording your information today, and then from 5th of April, you can register for self-assessment, and then report from 14th of July to the 5th of April. As the dog stop now. Yep, that's fine.
Sorry about that.
It's all right.
Postman. Right, can I claim for expenses incurred pre-officially being self-employed, such as a new tablet brought in December? That was through Amazon, so she'll have a receipt there. And the desk I bought last month, that was through the marketplace, so there won't be a receipt there. So what would you do for an official receipt?
So in terms of that, yes, you can claim pre-trading expenditure. I believe it's up to 7 years as well. So provided that you've not used it for any other use, if you bought something and it's just been sat there ready for your business, then you can claim the pre-trading expenditure. The pre-trading expenditure would be considered being bought on the first day of that you start self-employed. So let's say, for example, you knew you were going to become self-employed and you bought boxes, envelopes, postage bags, etc. in, let's say, May, and you just start your eBay business or your Etsy business today, then the expenses that you did for the postage material can be claimed on the first day of you start trading. In regards to the marketplace, if you can ask the person to literally do a little receipt, alternatively, screenshot the chat that you've got and just have some sort of evidence of what you paid and around about the date that you bought it. As long as HMRC can see that you've tried, then you've effectively kept good records. So yeah, I wouldn't stress about not getting an official receipt, but if you can ask the person just to conjure up one, that'll be great. If not, then just take a screenshot of the amount and when you bought it.
Okay, that was interesting, that one. And I work full-time at a PAYE job, paying an I already. How do I figure out and pay an I if self-employed too?
So there's basically an annual maximum calculation for NI if you are both employed and self-employed. GoSimpleTax does that for you. It's literally including all your employment income, include all your self-employment income, and then on the Almost There page, you'll have a box which basically says it basically asks for your NI contributions between the primary threshold and the upper earnings limit. Provided that you include that in there, that will automatically be calculated. If not, then I believe you need to do a 52-step calculation in relation to annual maxima. So if you're doing it manually, I'm not too sure whether HMRC does that calculation for you in terms of when you look at their when using their website. But if you submit the details to HMRC, then you may need to follow up with them a couple of months later to see whether they've actually done the calculation for you. Otherwise, as I say, move to GoSimpleTax, pay a small fee, and have that done almost immediately. And depending on how much you earn, that could be quite a substantial amount that you would be waiting on otherwise. And from my experience, I'll be honest, I've not seen HMRC often amend a tax return for but those that are employed and self-employed for their NI contributions. Usually they just sit there because obviously otherwise you owe more money. So they shouldn't do illegally, but I don't see that often that they do actually amend.
Okay. And these ones were now asked while you were presenting, so yeah. I think, yeah, they were. Can you claim miles to and from the location of work?
No, even as a self-employed individual, you would have a permanent workplace. That permanent workplace is the same as an employed person driving to and from work. They can't claim mileage, and neither can a self-employed person. If you're a mobile hairdresser, barber, whatever, personal trainer, then you can claim from your home to your clients. Yes, because your main place of work would be considered your home there. But if you've got a salon or whatever, then you can't claim the travel to and from there. So sorry that I'm using the hairdresser and salon example quite a bit, but I hope that people do understand in their terms as well, depending on what you are as a self-employed person.
Okay. The maximum I can claim for meals whilst working is £25. If I spend more than this amount, can I submit the receipt against a claim for the £25 I'm permitted to claim?
No. If I spend more than this amount, can I submit the? Oh yeah, you could submit it for the claim if you are allowed to claim £25. Then yes. If it's more, then you're just limited to what you receive back. But you can't claim more than the £25 if you spent more than £25. I'm assuming that's if you're working overnight and away from home. Then yes, keep the receipt because you need that for the £25. But you can't claim more than £25 that's allowable.
Okay. If you claim home allowance, you might create a capital gains tax problem when selling one's house.
It goes into the whole fact of use of the home. If you are claiming 100% business use for an element of the home, then yes, there's an issue with CGT. If you are claiming, like I explained, there's four rooms in the house, and you are using it 60% of the time, then that is considered a minor use, and therefore you don't really have to take that into account when looking at CGT. If you are saying my kitchen is always used for business and therefore 1/4 of my home is always business use for business, then yes, you affect your CGT calculation for your PPR, etc., because then you have got effectively business use of a home. Whereas because you're using an element of time in that room, then HMRC don't look into that.
Okay, and this question was asked while you were working through the deadlines. So if I file a self-assessment by the end of Jan and have to pay by the end of July, I think it's just got a bit confused. I didn't realise there's two payments that might be needed to be made.
Sorry, say that one again, please, Leanne.
Sorry, she's saying, so she files her self-assessment by the end of January, then she'll have to pay by the end of July.
No, okay, so you file your tax return by the end of January, and you have the balancing payment and the first payment on account to make on the same day, 31st of January. Hopefully you don't leave it till that late and you're doing it well in advance, but the last day that you can make payment and submit your tax return is the 31st of January. Then, if you are in that payment on account regime, you'll also have another payment to make by end of July. So if you fall into payments on account, there's really 2 dates that you need to look at paying: 31st of January and the 31st of July. But you definitely have to make your balancing payment by the 31st of January, along with the submission of your tax return.
Okay, I'm aware that we're coming up to the hour, but I think there is just a couple more questions, but we might as well just get them answered now, if that's okay, Aiden.
Yeah, if they want to stay on.
Can I pay my company tax straight from my business bank account, or do I need to take the payment as a dividend and pay the company tax?
It's basically, you're talking about a limited company here. You can't take a dividend until after you've paid your company tax, because you need to know how much reserves there are that are available to be issued as dividends. So effectively, as a limited company, you would have your profit, your bottom line. You would then take off any corporation tax due. You would pay it directly out of your business bank account, and then anything that's left over, you would then be able to take as a dividend for yourself. If you take any dividends for yourself over £2,000, you'll then have to pay dividend tax personally as well.
Okay, I think you might have already covered this one, but just to clarify, I've been told in your first self-employed return you're charged 150% of the full year one amount plus half of year two. Is this correct?
Yes and no. It is correct on the basis that you get charged 150% of the first year, but the July payment, which is the second payment, is effectively the other 50% that you've not paid of year one anyway. So overall, you'll pay double the amount of tax and NI due from your first year, but it is just split between 150% in January and 50% in July. So yeah, there or thereabouts. That is basically the simple way to explain payments on account, but isn't technically correct. But yeah, 150%, and then you've got 50% in July following. Yeah.
Okay, and then just bear with me, I'm just scrolling down, I just lost my place. We did have a couple of people asking what is Making Tax Digital.
Yeah, so I'll just touch on Making Tax Digital quickly. Making Tax Digital is going to come into legislation in 2024, and it's basically the modernising and digitalisation of the tax system. Anybody who has turnover, so that's gross income from a business and or rental property. So if you've got both a business and a rental property and they're both £6,000, you'll fall into MTD for both. So as long as you exceed £10,000 in gross income, you'll then fall into a new reporting scheme, which rather than submitting once a year, you're required to submit quarterly during the year. So April, May, June, you'll have to submit a quarter for that. July, August, September, this is going to play with my mind in terms of months, but that will be quarter two, so on and so forth. And basically, you allow HMRC more data in real time, and they basically will send you updates to say, we estimate your tax to be X amount from your first quarter. And it's basically allowing them to have more access to the information quicker, rather than just one submission a year, in short. There's also an end of period statement, which is due by 31st of January, as well as a final declaration, which includes all other income other than your self-employed and your rental property business. So it'll be a huge shake-up in terms of, if you have an accountant now, I'm assuming that accountancy fees will more than double. I'm not saying that they will, But I would, if I was an accountant, then I'm doing a Q1, Q2, Q3, Q4 submission. So that's 4 submissions plus an end of period statement. That's another submission plus a final declaration. That's 6 submissions when we only do 1 submission. So it's 6 times the work, more or less, in terms of submissions. I would expect at least double of your accountancy fees. So it's something to be aware of. And then likewise, for those that don't have an accountant, you've got to submit more often. So you'll need to be on the ball with your finances a little bit more, potentially coming on GoSimpleTax and filling out each month as you go along, and then submitting each quarter on time.
Okay, I think we'll definitely do a webinar on MTD. And we've just got one last question. When do you recommend tax returns are filed?
When do you reckon? It's completely up to each individual person, depending on whether you've had a good year, whether you had a bad year, whether you've got the money to pay for it, or whether you're just going to be demotivated by it. It's completely a person by person thing. I would say if you've had a bad year in comparison to the previous year, submit early, because if you fall on payments on account, then your July payment won't be due in full, and you may be due a refund. So that's for some. If you've had a bad year, I assume quite a lot of people had a bad year through COVID. Therefore, I assume a lot of people submitted early and got a tax rebate if they were on payments on account. If not, then a good time to submit is between July and October. Anything after that starts getting a bit hectic. So whilst it's summer holidays and hopefully you can sit down with your kids, or if you've got kids or whatever, then yeah, July to October. And then anything after that gets a bit mad and hectic, and you won't know what your liability is due in January. If you've not saved for it, then it's usually difficult to do around Christmas time, isn't it? So yeah, I would say early as possible, but it completely depends person by person.
Okay, so that's all the questions covered. Slightly overrun there, but sorry.
I was going to say, was there a question about a tax review? But I see you've answered it.
Yeah, yeah, I've answered that definitely.
The tax review service is an additional £99, and that's for basically 1 hour of my time, which includes 45 minutes of me reviewing the tax return, creating a report, and then sending out a link to then discuss what I've sent out on the report. We've only had good feedback, to be quite honest, from the around about 200 that we've done. I've had multiple people come back for 2 and 3 years as well. So hopefully that shines a good light on me. But yeah, we've not had anybody at all say they've had a bad experience, thank God. So yeah.
Okay, brilliant. So I think that's everything. We've got all the questions come through. There's not been any for quite a while now. Some people saying that they've missed some of it. Oh, sorry, I've just seen when do you recommend tax returns are filed? Just on that one, haven't we?
Yeah.
Okay, yeah, so I think we'll wrap things up there, everybody. So thank you for joining us today. And again, thank you to Money Donut for allowing us to present this webinar to you. Enjoy the rest of your day. Hope you get out in the sunshine. Thank you and goodbye.
Thanks, everyone.
Cheers.